Welcome to the 2022 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this August 28, 2022 edition Sunday. Please be sure to hit that subscribe to me button on Preach to Me's channel for the latest U.S. financial news, 100% pure unadulterated news. Thank you for your support. And today we're going to be talking about the inflation continuing to rise, but also where some items are falling in prices that could be happening too. So we could have an inflation and deflation happening at the same time as the Fed begins to tighten their balance sheets and raise interest rates into next year. So this is going to be very concerning. Americans all over from America, whether you are middle class, lower middle class, upper class, everybody's going to be feeling the pain and going to have to be making some sacrifices, either on the individual basis or a collective basis as a group. And so we have been to this place before, but not on this scale. This is a global scale type of recession, depression, and that's what's going to make it different than the 1929 depression that our grandparents, our forefathers experienced. And another thing that caveat is, like we've said earlier in previous videos, that this one's going to last much longer because of the amount of money printing and quantitative easing and the new laws, the banking laws and rules over the last 10 years that have allowed everybody to kind of just get a piece of easy money. And so now we're going to get right into it. We're going to look into these things here according to CNBC.com. Inflation is peaking. Really? Not yet. Even they question that. We haven't really reached the peak of inflation. Remember, real inflation is still, according to saddlestats.com, above 19%. Official inflation is at 8.1%. It did fall a little bit, but it's still very high for the items that we normally purchase on a daily basis. So now it's saying 10 common items where consumer prices are falling. You remember in the July Consumer Price Index, it showed some relief, but it still showed high inflation. And you remember at the beginning of this inflation cycle, we had boneless, skinless chicken breast was up 50%. Eggs were up 20%. Gas was obviously up 50%. Airfare was up. Now, 4 months into this thing, back before March and April of this year, now these things are being reduction in price. So 10 things that are cheaper now than they were a month ago. So now the media and other people are saying that meat, butter, eggs, milk, hot dogs, tomatoes, car rentals, of course a gallon of unleaded gas, airfare, and a night in the hotel have all decreased here, as you can see in this chart. But here was what they failed to mention. Most businessmen and women make it up in other areas, ladies and gentlemen, meaning energy costs. Energy costs in the UK, obviously, in Europe raised, 20% bills higher, and that's coming over here. So when they dropped the gas prices and the food prices, they raised the energy prices, or they raised the taxes. Some people will experience higher taxes and premiums on their car insurances in various locales of the United States. So you may get a break in one area, but then they raise products and services in another area, and that just takes more discretionary income away from you and I. So now we have this scenario where they're trying to paint the picture. Well, the grocery aisle prices are down. The problem is the supply chain is still bogged down, and inflation has eaten away, as this guy says, the conference board, Steve Odline, all discretionary income. And savings is at its lowest rate in the last 13 years. Okay. And the reason why is because inflation is just stripping that away. The more you have an emergency, a kid emergency or a family emergency, that strips more and more away from savings. And so now marketwatch.com, shrinking the Fed's balance sheet is not likely to be a benign process, quote, says new Jackson Hole study. So now we're going to be thinking about shrinking the balance sheet. The governors of the Reserve Bank speaking in Mumbai, other places, now they're thinking about cutting back on bond purchases. That means cutting back on mortgage-backed securities, MBSs. As you know, the Federal Reserve Bank backs over 65 to 70% of the current mortgage market, home mortgage market, and maybe even commercial loans market too as well, commercial mortgage-backed securities. We don't know. But we do know is that once they start shrinking the balance sheet to over $7 trillion on their balance sheet that they have, or $8 trillion right here, that it has on their balance sheet by buying these treasuries and mortgage-backed securities, they're going to have to shrink it. And so now this is a process that's going to take the next 2 to 3 years, ladies and gentlemen. And so what does that mean? That means that we're going to experience more pain, temporary relief at the pump. We know that these prices are going to go up after the midterms. Expect a rise and increase in prices in the gas in October, November, as we use our strategic reserves and everything continues to rise. Expect food to continue to not go up, but expect there to be limits on certain items of food and rations being installed by all of your favorite grocery stores by week as the time we get into September, October, November. October, November, December. By the wintertime, expect rationing on water, uh, anything to do with electricity, like candles, matches, generators, solar powered toys and different things like that. Expect rationing on propane, things of that nature. All of that's going to be rationed out come the winter time. So just a heads up on that. If you haven't stocked up already, as the kids have went back to school and other things have been going on right now. So just be on the lookout for that now, because what the Fed is telling us now is that, and Fed Chair Jerome Powell said in his meeting at Jackson Hole, Wyoming, this past Thursday and Friday, he said that warns that, quote, the fight against inflation will bring some pain. Well, right now we're already in a recession. Remember, we've already had 2 negative quarters of GDP. That's technically a recession that we're in right now. Now we're heading toward the beginning of the depression. And the Dow Jones, as you can see, was down 1,000 points on 3% on Friday, and it continues to go down some more. And so the job market is the next to fall. Once the job market, the layoffs begin this fall and winter and into next year, then the housing market will begin to cool. These excessive values and all of that will continue to go down, and they're already falling right now. Housing values are falling somewhat, and asking prices out west in San Francisco and LA and places like that, Phoenix and Denver, and now it's moving to the Midwest and the Northeast next. In terms of housing appreciation and equity values, they're going to fall slowly. It ain't going to be an overnight fall, but then all of a sudden it's going to fall slowly. Then the last minute, boom, it's going to drop down. So I predict a very tough year. Regardless of who wins the midterms, if the Republicans take over and all that, it's just going to be a very tough year, the next 2 years of President Biden's term. And this is just like reminiscent of Teddy Roosevelt's term, but during the Great Depression. But the problem is that he had more tools at his disposal. Right now, we just don't have much tools at our disposal. They can continue to print money and do forgivenesses and debt jubilees, but that has to be paid back through higher taxes and revenue. And that's what we're going to do, because the rich folks, the super rich, the super 1%, ultra 1%, have already started to move their money out, the big money, out of the country into other developing country markets, because they know what's coming, and you and I know what's coming, is that what goes up must come down eventually. So continue to stack, continue to prepare. Practical, safe items is what we need to prepare. Gold and silver is okay, crypto's okay, but I'm not a financial planner, but that's not going to help in the short term. As for after the collapse, that those things are going to happen. Because in the short time, people are going to be caring about, can they get the goods and services in America and the UK and Europe and other parts in the EU? Can they get the goods and services like heating their home and feeding their family and getting to survival clothes items and things of that nature before the rationing and the shutdown cards begin? We don't know when that is. It could be the end of this year, it could be next year, but it is going to be transitioning, because Jerome Powell just clearly stated that we're going to be in for some pain. This recession is going to last longer than a year. It's not going to go up and down. And there would be no more stimulus checks. And that's going to be the biggest thing, too. There's no more personal stimulus checks and no more corporate stimulus checks, at least for the very next 2 years. So that's basically what he's saying. And so we have to prepare as best we can. Anyway, have a blessed weekend, guys. Thank you so much, ladies and gentlemen, for listening. Please be sure to support this channel, and I thank you for your support. And we'll continue to learn and grow together. God bless you, and I'll talk to you very soon as we begin this new week here in the September. Beware of September. Take care, guys.